Welcome back. Well, we're in the thick of the earnings season, so let's get going with one of the IT companies that will be reacting to earnings. Mastek, of course, reported its numbers last week. It was a soft quarter with respect to revenue, a decline of 0.3% quarter on quarter, and the margin also slipped to 16% versus 17% in the quarter gone by. What led to that? That's the question we are posing to Hiral Chandrana, the CEO at Mastek Group, joining us on the show. Hi, thank you for speaking with us. Just wanted to begin by asking you, with respect to the Q4 revenue, it was a bit soft. What led to that? Was it a one-quarter impact, or this weakness is going to stay for a few more quarters, you believe?
Sure. Good morning. So we reported Q4 revenues of 93.7 million, and that was roughly 8.7% year-on-year growth. So this is Q4 to Q4 of last year. Our full year FY24 results were 368.4 million because it was the end of the fiscal year. And that was 15.8% year-on-year growth over the previous fiscal year. Q4 was definitely below our expectations. We saw a couple of transitory things which we're confident of bouncing back in Q1 and beyond. Overall, our order book backlog, particularly the 12 months order book backlog, which we track very closely, given it's a leading indicator, is very strong. It grew 19% year on year. And so, yeah, we're optimistic as we look at FY25 going ahead.
The other thing, I wanted to talk about also was the fact that just last week you were approved as a supplier for the UK Ministry of Defence, right? And I understand it's a $1.25 billion project. Give us some more details, when the project scale-up begins, the timeline of completion, the margin profile, etc.
Sure, Aisha. So Ministry of Defence has this framework called DIPS, which is Digital and IT Professional Services Framework. This is a large $1.2 billion framework. There are multiple lots. There are 6 specific lots. This is how the UK public sector adjudicates and awards business. We are shortlisted in 2 specific lots out of those 6. And within those 2 lots, in one of those lots, we are a prime supplier, right? Many suppliers do compete in these lots. So in this particular lot, there are about 5 or 6 suppliers. And in the second lot, where we are a subcontractor, there's about 8 other suppliers. The way this works is that this is a very strategic entry for us because this is a 4-year time frame. We've already won our small first deal as part of this DIPS framework, which is in the architecture as a service area. And we expect that over a period of 4 years, we'll have at least 50 to 60 million worth of work that will get awarded to us as part of these different lots. So that's really it's a strategic program that Ministry of Defence engaged with Crown Commercial Service to award to multiple suppliers, Aisha.
That clear, you're out of that $1.2 billion project, what will come to you as a total will be only $50 to $60 million. That's correct, right?
50 to 60 million is what we expect to be awarded from the framework, from the lots that we are shortlisted in. There are some lots where we might sub to other suppliers, and so that could be more. But this is the confidence level that we have over the next 3-4 years.
Hiral, you delivered about 19% year-on-year growth for FY24. With the given client conversations, the order backlog, etc., what kind of growth can one expect for FY25? Do you have a visibility on that?
Yeah, so Aisha, we don't guide financials, unfortunately, but let me give you maybe some flavor of client conversations and market and customer behavior, right? So there's continued caution when it comes to spend areas. Customers are looking to optimize. They're repurposing. They cannot really stop their investments in digital cloud and AI. So they're repurposing the savings into that, right? So that's one part of the dimension. The second, which is more interesting, is that you've seen these different waves of cloud, data, edge computing. You've seen AI more recently. So what Gartner calls interwoven architectures, right? Or others might call integrated platforms. The key here is that customers are looking to now put together and piece together these various technology platforms in a way that's meaningful for them, right? Which is more business-centric use cases. So that's the second kind of dimension. And the third, which is what AI led to, of course, there's cost and productivity expectations, but many of the customers are now expecting higher quality talent and more talent access. And that's where an SI like us comes in. We feel that we're at a good intersection where our resources are combination of domain expertise, functional expertise, as well as technology depth. And clients are breaking down some of these larger deals into more mid-size and smaller manageable chunks. So we are confident that as we look at the demand environment ahead, we're in a good position to be a differentiated business outcomes provider, which is where we work with our UK public sector, the example I gave you earlier, or for that matter, US healthcare or retail manufacturing, and
Right.
globally as well.
No, point taken. But Hiral, I appreciate that you can't give us a numerical guidance for the coming year. But what I want to get a sense from you is FY25 is going to be similar to FY24? Is it going to be better? And also with respect to margins, because they have come to the level of 16% versus the kind of 18% that we used to see in FY23. When do you see yourself scaling back in terms of that margin profile as well?
Yeah, so we will, like I said, we'll get back on the margin profile and range that we're comfortable with, which is in the 17 to 18% range that we've always wanted to be in. So that's as far as the operating EBITDA and margins are concerned. As far as the revenue and growth is concerned, in dollar terms, right, we grew, like I said, 15.8% year on year. So we expect that even if you remove the small acquisition that we did in FY24, we still grew at a fairly healthy rate compared to competition. So we expect FY25 to be along the same lines or potentially even better. It's a little bit tough to say. In the next 2 quarters, seems like customers are taking time. We had some impact in Q4 because of customer delays and ramp ups, but we believe the second half of the year will be much stronger for the industry.
Hiral, great to have you on the show. Thanks as always for taking the time out and speaking with us.
Always a pleasure. Thank you.
Okay, that's the word coming in from Mastek, but let's hear out what the management of HCL Technologies had to say